Good morning and welcome to the August 26th edition of the Gold, Goats, and Guns Market Report. My name is Tom Luongo. We've got a lot to talk about. All right, let's get things out of the way. John McCain's dead. Some people don't deserve a eulogy or a mourning period, and he's one of them. I didn't feel this. I felt the same way about Brzezinski when he died, and I feel the same way about McCain. As far as I'm concerned, McCain was a traitor. He's obvious deep state asset and one of the main architects of the current very fragile political world order. And he set in motion things that affect the lives of nearly every person on this planet for his own insane ideology and his own, to his eternal shame. He was a vindictive, nasty, vile human being. And I hope they plant a tree over his grave so that at least something good can come out of his life. All right, we had our annual convocation of central bankers at Jackson Hole over the weekend. Interesting thing to note was that the ECB didn't send anyone. And I think that that's something we really need to talk about here, at least briefly. It's obvious that the policy changes and the policy direction is diverging between the divergence that we've seen in the policy direction by the ECB and the Federal Reserve is now actually structural, I think. And that's actually something very interesting. Jerome Powell has not changed course. Markets rallied on Friday after we found out that the Fed was going to continue raising interest rates at the rate that they thought they were. And all of a sudden that sent the dollar into a slide after Donald Trump said the Fed needs to help support his policies by not raising the dollar and all of this stuff. It's very strange. But what it comes down to, and then the euro rallied on the same thing. Friday was a very strange day in the markets after Powell's Jackson Hole statement. And I don't quite know what to make of it. And that's saying something. I just don't know what to make of it. So I'm not shocked that stocks rose, and I'm not surprised that I am surprised though that the dollar fell, and that there was a rally in the euro. I'm not going to show you that the rally in the euro I don't think was all that interesting, and that gold flew on the same news, and gold closed the week over $1,200 an ounce. Again, there's some. Don't get too excited yet. There's a lot of technical work that still needs to be done. I'm going to show that in a minute. So it almost seems to me like Friday was a burn the shorts day in a variety of different markets who had been mispositioned based on where we were politically and in the headlines in the days leading up to Jackson Hole, because no one was really talking about Jackson Hole, and then all of a sudden the markets moved bigly, and as Scott Adams would put it. I think it's a very strange day, and I'm not sure it's indicative of anything terribly important. I think this week's far more important. We're getting up. This is going to be the end of the month. Friday will be the end of August. We're going to get a monthly close in August, and I'll have charts on Wednesday with indications of where we're going to go, of what we're looking for in weekly and for the monthly closes and the weekly close for Friday, and then obviously next Sunday we'll discuss those monthly closes. All right. The next thing I want to talk about is Angela Merkel. So in the wake of the Charm Tour sit down between Vladimir Putin and Angela Merkel last week, we also had Merkel coming out and being very active around the world. She's now talking about there's talks about her joining the peace process in Syria officially. That's outside of the Geneva talks, which are headed by the United States. If you're not aware of this, the Geneva talks are headed up by the United States, whereas the Astana talks are being led by the Russians and the Chinese. and the Turks, and they're the ones actually they're the talks that are actually forming the future of Syria. And Merkel's talking in terms of being a part of the Astana process. And then, moreover, she visited Azerbaijan over the weekend, and I found that very interesting considering her talk with Putin. I had an article on Strategic Culture this week about Azerbaijan, and in the wake of the Caspian Sea agreement that came out. And Azerbaijan, as you well know, is, or if you don't know, was the crown jewel of the Caspian opposition to Russia, right? This is, in the wake of the fall of the Soviet Union, Azerbaijan and Uzbekistan, and to a lesser extent Turkmenistan, were all, we cozied up to them, threw in a bunch of money, used their antipathy against the Soviet Union against them, and slowly but surely over the last 15 years or so, Putin has been repairing relations between Russia and all these countries, and Azerbaijan's one of them. And the flare-up of the Nagorno-Karabakh conflict between Azerbaijan and Armenia a couple of years ago was a direct result of John Kerry's intervention into the region. Again, that conflict is mostly dormant for 20 years, and then Kerry shows up as Secretary of State, and 3 days later there's fighting again, and it's on the front page of every major newspaper in the United States. Merkel made it clear that she wants to be a part of settling Nagorno-Karabakh permanently. And that's a good thing, because that actually, understand that the Southern Gas Corridor, a terribly inefficient project, but that goes from the Caspian Sea over into Europe, and which will eventually get, we'll see the Trans-Adriatic pipeline built into Italy and others. The Southern Gas Corridor is very important. Azerbaijan is very important to that, and that pipeline has to cross that entire region, and it has to go through. For that development to take place, there can't be fighting between Armenia and Azerbaijan. So Merkel is putting paid, is the better way of putting it, her wish for an independent foreign policy, and certainly an independent energy policy for Germany. And that's yet another signal that she and Putin are closer in alignment than may first appear from the rhetoric. So continue to watch the situation between Merkel and Putin geopolitically very carefully. All right. And then obviously we talked earlier about gold rallying, so let's talk about gold. All right. So we had remember I told you that this was a potential spike bottom here, and then we had this really, really strong rally over this week, and this is a great moment. But it's also, this is a nasty, nasty downtrend. And now we've talked about, and there's been a lot of headlines about, there's been tremendous net shorts by the hedgers in the gold futures market, and record levels even. And same thing in U.S. Treasury bonds. And that's part of what I think is unwinding here. But what's important is to understand that this week we're looking at that high. We have to best that high this week. Now, there's a very high probability, thanks to this incredibly strong close on Friday, 97% chance that we're going to break last week's high. But the real situation, the real test here will be whether or not gold can put in a kind of classic 2-bar weekly reversal, and there's a 63% chance of that probability. That's not based on any trend length analysis. This is actually based on historical weekly data, and then plugging in the idea that, well, if we get a 25% move up, or if we get a move above the last week's high, what's the probability that we'll get a move above the previous week's high? And that's a very simple calculation to do. It's part of the kind of quantitative analysis I do behind the scenes. It's not terribly difficult to do, and I can talk about it in more detail at some point in the future. Last week, one of the subscribers asked, how can I figure that? How can I find this stuff out. And I said, well, since I wrote the book, you might as well read it, because I actually ghost wrote a book a while ago for a guy by the name of Peter Pham called The Big Trade, which goes over the system. And I really do use a lot of Peter's system, which is just a kind of a refinement of classical quantitative analysis of guys like Victor Niederhofer and others. And it's nothing revolutionary. It is important kind of from a philosophical perspective that you keep the chart as clean as possible, that you try not to look at like trend lines and stick figures and draw pictures on your charts. Just look at the data, just manipulate the raw data, the data that you know, in this case, open, high, low, and close, and then view very simple transformations of that data and statistical kind of histogram analysis of that data. And that will give you the closest thing to a quantitative set of pot odds that you can get with minimal distortion and minimal interpretation. And that's what we're doing, and that's what I'm doing here. That's where these numbers come from. I haven't been clear about that in previous weeks, and I wanted to just kind of show the stuff to you, and then we'll start to talk about it later. But it was one of the subscribers asked about it. I put a link in the description to last Wednesday's market report. I can do it again. You can go find the book and read it to understand the methodology and the reasoning behind it. And you'll see my imprints all over the book. I mean, it's not hard to realize, who wrote it. But that's that. So so when looking at this today, we have a 5/8. Let's put it this way: if you're looking for an edge here, right, you've got a 96% chance that we're going to break the previous high, which in this case is maybe a 1% move. So you got a 97% chance of like scalping 1 or 2 points, off of gold. You have basically 4-to-1 odds that gold is going to go up, as opposed to up a little, as opposed to down a lot. Not really all that interesting. But the more important thing is how big is, what are your odds? In this case, basically, you've got basically 8-to-5 odds that you're going to be able to get this move, which is closer to $15 in gold. And, if you're trading futures, $15 is a lot of money. So depending on how you structure the trade. So it can be very, very powerful. But it's definitely a momentum-based strategy. It's not really a trend-based strategy. It's more of a momentum-based strategy. Guys like Gartman use this kind of analysis. And that's why they're easy pickings for things like for people on zero hedge, because Gartman is constantly, moving long and then short and doing all these things because he's positioning in real time based on numbers like this. Okay. All right. I mean, it's really that simple. So you can take zero hedge's antipathy towards Dennis Gartman with a grain of salt. Okay. All right, so let's move off of gold. But this is good. If we get a bounce here above last week's, the takeaway here is if we get a close this week above last week's high, that would be a very strong 2-bar reversal signal on the weekly chart. And then it would have some significance on the monthly chart, but not a lot, because this would be the August high. If we got a close above here, that would be very strong, because that would negate a lot of this downtrend. And I don't see that happening. So actually, no, that would be August high. It would have to come back up to there. We'd have to get back up to July's high, which would be well above 1280. And I don't see a $70 move in gold this week. So the monthly chart's still going to be bearish, but the weekly chart could be turning bullish, and that may be indicative of a medium-term trend change, and say a bounce back up towards 1280, and then maybe a good solid tradable range before we start moving higher. Because this could be our final washout in gold, or it could just be a dead cat bounce, and we don't close above that this week, and we're going to go lower down towards target of around 1130. Okay, that's the important takeaway. All right, so let's look. So speaking of not getting the reversal signal that you were hoping for, or in this case, since we're net short the euro, not hoping for. Here's a classic example of when you get a bounce in a stock, but you don't get a strong signal. Right, so this looks like an impressive rally, and if you were short the euro at $1.13 and you were watching the Swiss franc euro pair, you would know that the Swiss National Bank started to intervene, and you should have gone long the euro up to this high, and then you should have been selling into that. And that's exactly what we saw this week twice. As a matter of fact, we 2 opportunities this week to close above $1.16.3 on the euro, and it didn't. And it failed both on like Wednesday and Friday, and they both failed, or Tuesday and Friday, either way. But not closing above that high, even though we're only within 6 pips of it, that's not a 2-bar reversal. That's indicative. This is still resistance. Now, we may get a push higher this week, a little bit higher this week, but the fact that we couldn't get through this, or the euro couldn't get through that this week, sets up that this is the top of the rally if there's going to be any more to this rally. Okay? So what we could see is an early week blow off up towards $1.17, but then finish the week below $1.16. And we can get a high tail. So I'm expecting kind of a high tail bar this week, but we could just get a small impulse move above above last week's high, which was higher than this level, but remember, we didn't close above it. We could get that little impulse high, and then it collapsed. Okay, so the reversal probability on a trend line basis, meaning this is now a 2-bar, this is now a 2-week uptrend. The euro doesn't like to trend in one direction for very long, so only under extreme circumstances like this, and even here. Even this massive breakdown was only a 3-week downtrend. So a 3-week uptrend in the euro is a rare event, looking at all of these, right? So again, the probability here is for some kind of bar like this one, a high tail with a low close. It may be, that opens, we can even open above this. We could even open above this here and then see a blow off top and then collapse this week into the low, which would still keep the monthly chart bearish along with the weekly chart. All right, and then similar situation here in Bitcoin. So let's talk about Bitcoin real quick. Now the Bitcoin, one thing about the Bitcoin statistics are, because I don't have a lot of data for Bitcoin in this range, at these comparable numbers, every week these numbers are going to change because I'm adding to the data set. Right now, this is only covering 69 weeks of data or 67 weeks of data. This covers 5 years worth of data. Okay, this covers 5 years worth of data. Okay, but this only covers a little over a year, because a little over a year ago, Bitcoin was trading below $1,000, and those are large $200 moves. Then we'll just skew this, the $100 or $200 moves then, which were moving the markets by 10-20%, are overwhelmed in this noise. So we're trying to get a better sense of what the data set really should be. And honestly, these numbers in here, these weeks in here, should just be thrown out of the statistics because they're not indicative of the current volatility in Bitcoin. But I'm adding to this data set every week, so it's going to get, so the data should get of higher and higher quality, and the noise should, and the noisiness of this data should improve as well. Remember, I am a chemist and a former research chemist who has done a lot of data manipulation and a lot of understanding how the data works, right? And these numbers are your mean numbers, but your standard deviations, which I'm not showing, are incredibly high. Okay, so there's not a lot of precision to this data. It's very noisy. So better to then fall back on kind of bigger picture stuff, not stuff that I'm crazy about because there's no quantitative analysis behind it, but there is. You fall back on basic market psychology. This is a double bottom. This means that buyers have come in twice at this level to support the price. They came in once here, and then they pushed it down lower. Shorts were able to push it down lower. Sellers were, but then, the bulls held their ground in this 5,800, 6,000 range, and now they've done it twice. Okay, there was a violent snapback here, and then now there's a weak uptrend here, and this weak uptrend is not a reversal signal. Notice 2 bars, and we didn't close above 7,150. We closed at 6,700 this week. We didn't even try. We barely closed above the midpoint of this bar, which is, again, not a particularly bullish signal. Okay, so I've been hoping for a tradable range between 6,000 and 8,000. It looks like it may be between 6,000 and 7,000. Now, the longer we go in a market as volatile as Bitcoin with these very small bars like this, the more likely that we're going to get an explosion in one direction or the other going forward. And now the question is, who's going to win? Is it going to be the bulls or the bears? And that's where we start to watch for important technical signals. But for right now, we got a double bottom forming, but it's a very weak bottom. So this week we've got a 8 to 5 odds that we're going to break to the upside, 80% chance that we're going to break above last week's high of near 7,000. and only, and a coin flip that we're going to go lower. But that's based on very noisy data. So, salt to taste. The real thing here is, can we, even if we do close, Bitcoin closes above 7150 this week, that would be a 3-bar signal, and 3-bar reversals are not tradable. It may be indicative that we've got a nice new, cautious uptrend forming in Bitcoin. That could be what that means. It could also mean that it's just, a bull trap, and the shorts are just lining up at 7,300 or 7,500 or even 8,000 to then smack it down into the fives later on in, say, October. So that's what we're looking for right now. All right. So that's what I've got for this Sunday. If you have any questions or you want different things analyzed than what I think is important, please leave comments below, and I'll be happy to do an analysis on, Tesla or silver or oil or whatever it is that you're interested in. If there's a stock you want me to cover, I'll be happy to do so. Just leave a comment below, and I'll add it to the schedule for the next market report. You guys take care. You have a great Sunday afternoon, and keep your stick on the ice.